All right, guys, so here we are in the next part of the chapter talking about discontinuing an unprofitable segment, which is the number two one, sorry. So a business may decide to discontinue a product, department, branch, territory, or other segments of the business because it's not generating a profit, right? They're losing money. So let's talk about what it means to discontinue or eliminate a product or a segment and what that looks like, okay? So in our example here on the screen, we have this Bottle Creek cereal. You can think of them as a General Mills. Hopefully I don't get sued. But anyways, so here in our example, we have these three different product lines. We have corn flakes, toasted oats, and bran flakes. Now, in looking at all three, it's quick and it's really easy to identify the one that's underperforming, which is the bran flakes, right? They're losing about $11,000 per year or per month or whatever the case may be. Now, logically, if we wanted, it would make sense for us to look at this scenario and say, oh, we're going to discontinue the bran flakes line because they're losing money. But you must be very careful in how you go about eliminating or discontinuing a product segment because some costs cannot be eliminated. So some costs such as your fixed costs, which includes like depreciation, insurance, and property taxes, these can be eliminated. So all of your variable costs, which we know variable costs could be direct materials, direct labor, and variable factory overhead, all of that can be eliminated if you discontinue bran flakes, but all of your fixed costs cannot. And so at this point, you have to decide, hey, if I decided to discontinue this product line, how much in fixed costs am I still having to pay by discontinuing it? So it's not a black or white decision as some of you may think. So let's go through how a business can decide if they want to discontinue an unprofitable product line, a territory, or what have you, okay? All right, so in looking at this, here is our example, okay? So example number one or alternative number one is to continue bran flakes product line, right? So if we decided to continue this product line, all of this information is just transmitted from the prior screen, which is this one, right? So here's our revenue of $100,000. We have our variable and fixed costs. It's very important that we segregate those out because remember, under discontinuing an unprofitable segment, there are some costs that cannot be eliminated, which is your fixed cost. And so here in the very first column, we have our income from operation, or our income is a loss of $11,000. Now, if we decided to eliminate or discontinue bran flakes, which is alternative number two, obviously if we decide to no longer make it, our revenue would be zero, right? Because we're not selling it anymore. Our variable costs, such as direct materials, labor, and our variable factory overhead would also be zero because, again, we're not making that product anymore. We have no labor to make it. We don't have materials because we discontinued it. However, as mentioned before, our fixed costs will remain the same. And so if we're comparing continuing and discontinuing, you should see that both of them are still sitting at $26,000 because, again, we can't get rid of our fixed costs. So anyways, overall, our overall loss is $26,000. Now, as mentioned before, in the very last column is our differential effect, where we're doing the actual comparison between alternative number two and alternative number one. And so in doing a calculation, we see that our income is a loss of $15,000 overall. So in looking at this evaluation, what makes sense for the leader of this business or product manager, what have you, is it would make more sense to continue bran flakes than to discontinue it because we have a less of a loss by continuing it versus discontinuing it. right? We lose $26,000 if we discontinue versus losing $11,000. Now, of course, there is some exceptions to this rule. So one of the things you need to consider is short-term versus long-term effects, right? So in the short term, you may decide, or a company may decide to continue it, right? Because the loss is more palatable than under the discontinuing it. But if long-term, if you're looking at the long-term effects of it, maybe if you just say, or if your business is saying, hey, we just no longer want to make brand flakes, then the right decision to do is just to continue it for the long term, because you have no desire to continue to make brand flakes or to sell in that territory or to continue to make that product. So short term, you will be hurt. But in the long term, if you don't plan to make it, then you should discontinue it. So it's important that you consider both the long term and the short term, because there's a lot of employee morale and productivity that's at stake when making these decisions, because you have to deal with layoff and relocation and things of that nature, okay? All right, so here's our example of our independent example of trying to decide if we should discontinue an unprofitable segment. So we have this product, AG52, has revenue of $748,000, variable cost of goods sold of $640,000, variable selling expenses of $90,000, and then we have fixed costs of $50,000, creating a loss from operation of $32,000. So we're trying to decide if we should discontinue the production of AG52, or would it make more sense just to continue and then take a less of a loss, okay? So this is our differential analysis. As you can see on the screen, alternative number 1 is to continue to make it. Alternative number 2 is to discontinue it. And so now we're going to fill in the table, okay? So it looks a little bit off, but that's okay. So our revenue here is, we're going to fill this all in, but here's our revenue, cost, variable cost of goods sold, variable selling and administration, our fixed costs, and the income from loss, our income or losses. So now from here, we're going to just pull it in, right? So if we continue making product AG52, we'll generate a revenue of $748,000. The cost associated with continuing this production is $640,000. Then our variable selling expenses, our fixed costs, and lastly, our loss from continuing the production of this is $32,000. Now, if we're discontinuing, remember, if we discontinue this product, then we're not going to have any revenue, right? We're no longer making it. So it's going to be 0. Our variable and selling expenses, again, because it's variable, meaning it's dependent on if we sell it, but because we're not selling it, all of our variable costs will be 0. And then remember, when we are discontinuing a product, fixed costs will remain the same no matter what. And so our overall loss is $50,000 if we discontinue this product. Now, in the very last column, we need to evaluate the differential effect. So here we have it. Oops. So overall, we would have the differential is $18,000. So in this particular example, if I'm considering, again, continuing a product or discontinuing it, it would make more sense to continue the production of product AG52 because it would yield less of a loss than to discontinue it at $50,000. Okay, so when we're looking at discontinuing an unprofitable segment, we're thinking about which one will hurt us less if we discontinue it, right? We're trying to minimize the loss depending on our strategy, right? So we lose a little bit less by continuing the production versus discontinuing it altogether, okay? All right, so with that, I'm gonna stop this video, and in the next video, we're gonna pick up and do manufacturing or purchasing a needed part, okay? So I'll see you.